Hello, everyone. Welcome to today's webinar. And I would like to say good day to those in the US, and good evening to those in the London time zone. Our webinar today is brought to you by the Performance Management SIG. And as you can see on the slide that you have, it is on mature supply chain planning and how this is essential for effective FP&A and finance transformation. Before going into the webinar itself, just a couple of other things I would like to mention. First of all, my name is Deborah DeVos, and I am part of the Performance Management SIG, which is a group within the IMA, the IMA organization that is trying to provide thought leadership and a forum for exchange and best practices on performance management, so you can act as an expert to help improve the performance of your organization. As you see here on the slide, there is a QR code on the left. You can scan this and you could sign up today to be part of the team of this group. It's actually a quite interesting group. We have a place on the IMA website where you can participate in conversations, and we have the regular webinars. So we encourage our members to participate in the SIG. And I just want to mention here it says that our next webinar is on May 6th. That's an error. It's actually on October 7th, and it will be a very interesting topic on beyond budgeting. Business agility, around business agility. So looking forward to that. And I'm going to go now quickly to the housekeeping slides. Please note that you're muted upon entry. Please use the Q&A to ask questions and the attendee chat to interact. The Q&A session will be held at the end of the presentation. Poll questions will appear in the slides window. If you do not see the poll question, please refresh your browser. It's probably due to that. And a copy of this presentation has already been uploaded for you to access in the related content section. To receive full CP credit, you must attend the entire presentation, answer all polling questions, and please complete the evaluation form at the end of the survey, at the end of the webinar. Click on the Take Survey icon. The link to the recording will be emailed to attendees along with a link to download your CP certificate 1 hour after webcast. And with no further ado, I would like to introduce our presenter today, Dean Sorensen, who is both a CPA and a CPIM. He is the founder of the Integrated Business Planning Collaborative. He has a background from KPMG, A.T. Kearney, and Accenture. And Dean is a leader in the Manufacturing Special Interest Group, which is part of the Profitability Analytics Center of Excellence. And Dean is also a leader within the IMA SIG. So with no further ado, I hand this over to Dean.
Thanks, Deborah. Well, it's a pleasure to be here and to see so many people signed up. I'm just encouraged by the number of people who signed up for this webcast. About me, you can see from the screen that, you know, the vast majority of my experience has been in manufacturing in a variety of different roles. And I think one of the things you'll find is that, you know, this, experience between finance and ops will show up a lot in terms of, you know, some of the things that you'll end up hearing. One of the things that that I think that we're talking about here is a more strategic approach to finance And especially in manufacturing, where I think integration between finance and operations, I think is becoming increasingly important, especially to many people. And one of the things that I look at, and I pay attention to, kind of job postings and what people are looking for. If you look in what a lot of what I call more forward-thinking companies are looking for, what you're going to end up finding is that manufacturing and supply chain management is becoming increasingly important to strategic finance executives because I think they recognize that manufacturing is quite unique, and that the sorts of integration with manufacturing and supply chain is really essential for manufacturing. And one of the things that I'm going to be talking about today is kind of the things that are kind of falling between the cracks between finance and ops. So, for a lot of people who've been around, FP&A and integrated business planning, sales and operations planning, and have done a lot of things in this space, one of the things you'll find is I think that people are finding that things are kind of falling between the cracks, if you will, between finance and operations. And I've actually captured much of this in an article that I wrote for Strategic Finance. And by the way, at the end, you can request a copy of that article. It hasn't been published yet, but the draft is ready. And if you like the content in this webinar, I think you'll find the article of interest. So the things that I find that people are really seeing as symptoms of some of the challenges. So we've done all these things, we've invested in all these technologies, yet a lot of manufacturers still can't forecast direct cash flow and working capital. They still can't forecast product and customer profitability. Scenario planning is not as robust as they'd like. Cross-functional trade-off decisions are hard to make, and overall rolling forecasts and S&OP and IBP may not be working as well as they'd like, which also extends into the whole budgeting process. Like, how do you actually really fundamentally transform budgeting through more effective rolling forecasts? I think they're really still kind of struggling with that, the bigger that they get. And related things like being able to have one executable plan, cross-functional alignment. Ultimately, all this means that, one of the things that companies are struggling with is the ability to optimize cost, profits, and value. That's really sort of some of the things that they're really struggling with and what we'll focus on today. So one of the things that we're going to talk about is how mature supply chain planning is kind of changing this. And we're going to talk about, from a technology perspective and from a process perspective, what's different about these processes? How do they support kind of legacy FP&A and S&OP type processes and solutions? And what the incremental capabilities they bring and why it is that they're able to bring so much value. What's more, we'll talk about how this value, you don't have to launch into a big monolithic project to extract this value, and that, the way that these tools and solutions are evolving, that much of this, you can see much more self-funding in terms of how value is extracted. So we'll talk about what organizations need to do differently to capitalize it. And we'll also briefly talk about how this enables ESG, integrated reporting and thinking, which is important to many people, and how this may apply to non-manufacturers. So this is the agenda that we have for today. And what I'm going to do first is, start off into like a recap. I did a webinar a few months ago on rolling forecasts. I'm going to recap some of the key points out of that and share some quick perspectives before we get too deep. Then I'll talk about what does an integrated planning process look like? So how does it support an integration of like rolling forecast SOP, and how does that affect budgeting process? And this is kind of goes along with the whole beyond budgeting thing and how you can kind of transform your budgeting process. Then I'll talk about what's the foundation for a mature planning and performance management process, what's the framework. Then we'll get into supply chain planning, and we'll talk about what's so different about supply chain planning models that make them so much more effective than a lot of FP&A tools. We'll talk about then how do you capitalize on this. And then we'll get into the, kind of strategy and how the SIG could be of help, and how open it up for some questions. But also, just so I'll make sure that I mention it, after this webinar, when we get to the end of the 60 minutes, there's a link in the chat, and we're going to have, we've set up a separate Zoom meeting. So if you want to jump in and have talk about, things that you'd like to do within the SIG, or questions you might want to have, we wanted to use this as a forum to kind of kick off the SIG, if you will, because this is still kind of new. And if you have some, some things that you'd like to share or get involved, we'd love to have you join in on that as well. So with that, let me just start off with some perspectives. So one of the things that I found, just looking at from both a financial and operational perspective, one of the things you end up finding is that as you start getting bigger and more complex, one of the things that you end up finding is that the models being supported by both financial and operational tools become increasingly inaccurate, and I'll get into that in a sec. But the other thing is that one of the things that, driving strategy and supporting the business, much of that involves tearing down functional silos. But in fact, what's happening with a lot of these legacy tools are actually they're reinforcing functional silos rather than tearing them down. So this is really kind of contributing to an ineffectiveness in these processes. So one of the reasons for this, like if, one of the things I want to do here is just kind of compare, what do you mean by planning tools and what makes one so different than the other? And one of the things that I see is if you look at mature supply chain planning tools and then comparing to FP&A tools, there's just no comparison in terms of the level of sophistication you get out of these tools. Are kind of like really, it's driver-based planning on steroids. So, even supply chain planning tools are notoriously bad at planning overhead costs or anything beyond manufacturing. But the reality is kind of the FP&A tools aren't that much better. And, some recent evolutions, like with XP&A tools, yeah, they've improved a bit, but they're still not quite as good as the supply chain tools. And where the real innovations are taking place, what's happening is that you now have supply chain planning tools that I think are going to really challenge FP&A tools and XP&A tools as a basis for planning, because they're fundamentally so much more sophisticated than FP&A tools. And one of the things that they do that FP&A tools are not doing, so you can see in Gartner, one of the things they talked about a couple of years ago in their conference was this inability to manage cross-functional trade-offs. And this is something that FP&A tools are just notoriously bad at. And even when combined with, like an FP&A tool or process with an operational one, companies are still struggling with this. And the reason why this is important is because it really erodes value and in terms of complexity costs, and it leads to wrong decisions, especially as it relates to the introduction of new products, customers, and suppliers. And if you kind of do the math on this gap in planning and performance management tools, this is what global manufacturers are losing every year in kind of lost profits. So this is kind of the back of the envelope kind of calculation that I did, but it's pretty significant. And what the underlying issue is if many of you may have heard of activity-based costing before, but the reality is that one of the things that's never happened is that we've never decided or figured out how do you avoid these problems in the first place, because activity-based costing is really kind of a backward-looking tool. And, people have now come up with time-based activity-based costing, but that's not even close to what kind of companies, I think, what they really need. So, if you're really hitting on all cylinders, I think that what companies ought to be doing, or what they should be looking at, is the ability to fully integrate and have more of a dynamic cost value optimization where cost structures self-adjust to change. And, without that kind of capability, one of the things I see is that companies are really struggling to achieve these kinds of things: profitable growth, sustainable cost reduction. And that's what I think that companies are kind of struggling with still. So much of this, this is just kind of summary of a bunch of research studies I found. And what you see in red is all the things that companies are struggling with. So cost management, despite what a lot of tool providers are telling you, I think they're just notoriously bad at this. And it's something that they've kind of overlooked, and it's kind of this thing that's kind of falling between the cracks of financial and operational solutions. So we kind of summarize this into like a kind of a bucket or groups of challenges. So, managing profits and value, scenario planning, strategy, and business support. So these are kind of things that kind of what I see companies are struggling with. So, this is going to lead us to the first question that we're going to have here, which is, to what extent do these management challenges apply to your organization? So this is a pretty simple survey. So I split it up between manufacturing and non-manufacturing. And what I want to find out is, does most of these things apply, or do they apply, or do they not apply? So with that, I'm going to turn the poll on. And Deborah, perhaps maybe you can provide some context about this, about how you would think about it within your company.
I definitely think that this is the case, what you were just describing. Yes. Hessel, what about you?
Oh, very much. In non-manufacturing, I think a lot of these challenges apply for us, really making decisions that go across the functions, right? It's easy to make decisions within the silo, but ignoring the other impacts is very common.
Yeah, that's something that I find in a lot of companies as well. It's the thing, like when you do kind of activity-based costing, that's the thing that you tend to find is that companies are having struggling with these kind of cross-functional decisions. So we've got 83% or 85% now that have answered. I think I'll move to the answers and kind of see what we come up with. Okay, so the trends are kind of where I thought they would be. So from a manufacturing perspective, for a lot of these things really apply in manufacturing, and same sort of trend in non-manufacturing as well, although it's probably more exacerbated in manufacturing. So that's kind of like what I would have expected. So with that, I'm just going to move to the next question. So one of the things I want to try to understand is that these results tend to be more acute in kind of complex companies. So the question I'm asking here is that, is your organization complex? So what I'm trying to get at is, to what extent is complexity undermining your planning? So perhaps you can just give us an indication of how complex your company is, and we can further understand the current situation in many companies. So Deborah, I think that you've worked in some pretty sophisticated and complex companies. I suspect you'll find that coping with complexity is definitely a factor in addressing these issues.
Yes, and because when you do your planning, you typically start with your historical actuals, and the knee-jerk reaction is to try to plan in the way that you do your actuals, but it becomes very difficult. So yes, the more when you do have a complex organization, you end up trying to have a complex planning, which is suboptimal. Let's put it that way. Okay. We have 72% of participants who have answered. The last few, if you can answer up, so we have a lot of slides.
Yeah. Okay, I'm going to move it along then.
Yeah.
So, good. So this makes a lot of sense to me. So a lot of you that are in complex, you can see that the issues in kind of complex manufacturing, you're going to find that these are far more relevant to you as well, because in smaller manufacturers and smaller companies are probably not having the same things. So let's kind of move on, because I think those of you who are working in complex companies will find this quite relevant. So what I'm going to do now is I'm going to quickly go through the process. What does the process look like, so that you understand the context for what I'm talking about for the rest of the presentation. So the first thing I want to talk about is, when we talk about a process, you're having one model, one measurement structure, one data governance, and so you're kind of bringing together rolling forecasts and sales and operations planning. And the key principle in these processes that you're really planning at a level of detail that the frontline managers are using. So rather than trying to aggregate it all, just as a finance person, just leverage how they manage their particular functions. And in the article, this is a pretty busy slide. In the article, this is kind of the exact process in the article, but I've summarized it for the purpose of this presentation. I'm just going to walk through each of these steps in the process. So these are the core steps that I'm going to walk through and talk about how it's actually changing. So the first thing, in a lot of companies, that you may have demand forecasting in one solution and financial forecast in another. So in an integrated world, this all happens in one place. You'll have different views of revenue and demand. Then the next, once you've got the demand done, you're kind of forecasting the business. So you're simultaneously, what's happening here is that you're simultaneously calculating all of these things. So I'm just going to quickly walk through what's happening. So, once you got the demand plan, you hit the calc button. The next thing it's going to calculate using the bills of materials and routings, like, what are the manufacturing resources that I need? Then extend that to non-manufacturing resources to the rest of the organization. So that includes overhead costs, supply costs, that kind of thing. Then translate that into activity and departmental costs, and then summarize that by in terms of direct cash flow and balance sheet. And later on, one of the things I'm going to talk about is a framework for actually doing this. But what's actually happening here, if you think about a supply chain planning solution, there may be millions of calculations underneath this. And what's happening is that, the framework kind of summarizes all these millions of calculations into essentially journal entries, which is really what's kind of driving your cash flow and balance sheet. Then translate that into activity-based costing, profits, and then into financial statements. And all this is happening with a single calculation. And of course, the same framework supports integrated reporting and thinking, which may be relevant to many people as well. So what this is an example of a concurrent process. And what's happening is this concurrent process, you can literally collapse the translation of a business forecast into, like, what I call an executable plan within a day. And one of the things that actually drives this is the ability to distribute ownership of the planning models. So what's happening and on the front lines, from a performance management perspective, it's calculating all the variances, determining corrective actions. So when I say variance, I mean volume, mix, price variances, and then utilizing that information to update planning models, so you can actually, so it can actually support kind of a zero-based, driver-based planning model. And I'm going to give you an illustration of this in a subsequent section as to how this would work. And then what's happening is that it's giving you cost and profit information. And what's happening here is that one of the key levers you find, like when you do activity-based costing, one of the things you typically find is that you're often overserving or underserving your customers. And this is probably one of the greatest areas of cost reduction or profitability improvement that companies get. And this is one of the levers that's built into this process. So you'll see here this is just an example, customer profit of 9 million. And that's one of the activities is really kind of fulfilling orders. So you see, if you forecast regular orders at 1%, expedited orders here, you see the cost per order is different. And if you have a mix difference, it's going to fundamentally change your profitability. The thing is, you can forecast this. These things are all often known. So what this does is it heads off, profitability issues ahead of time. So basically, all this cost activity-based costing, if you will, is kind of falling out of a rolling forecast process. And from this, then one can do these some scenario planning that addresses cross-functional trade-offs. And one of the things you can also use these tools or processes for to engineer cost structures as part of your new product development process. And then ultimately, once you're finished, you can finalize and deploy the plan. And one of the things that allows you to do this is what I call internal market mechanisms. And this is probably one of the most critical things in terms of what I'm going to share with you, is that one of the things you want to do is get people away from fixed budgets. And that's kind of like, if you look at one of the reasons why rolling forecasts don't work and why budgeting remains so difficult is because you're kind of still focused on fixed budgets. So what you really want to do is get people, if you say this is an order to cash process, I want people focused on cost per order, and know if I have cost per order, if I know what the process and activity costs are, then I can manage the other metrics associated with that, let's say an order to cash process. So what you really want to do is reward people for managing these conflicting metrics, and these targets should self-adjust to change. So, and you can actually drive this sort of alignment across functions and entities. And this view on the left really kind of falls out of the process that I just mentioned. And there was an article written in Harvard Business Review about this, of being able to manage productivity. And there's a quote here that, the best companies are more than 40% more productive than the rest and see much higher operating margins. So this alone is going to drive a lot of value for companies. But, managing productivity is not such a big deal. Managing productivity in a way that reconciles to financials is a big deal, because as you and I know, if things don't reconcile to your budget or your GL, nobody's going to believe it. And this is kind of the thing I'm talking about, is that one of the things that falls out of this process is the ability to look at costs from both a functional and a process perspective to drive this. And what also falls out of this, what drives it, and this is what's driving your forward-looking activity-based planning. This kind of falls out of a single process. And so these are kind of the key changes that you'll see. And that, to me, these are the things that are kind of fundamental to doing things like beyond budgeting, driving market responsive processes, that kind of thing. So one executable plan, concurrent processes, distributed model ownership, focusing on net profit, and having these internal market mechanisms that can drive change. But one of the things that also happens is that if many of you are in manufacturing, one of the things that falls out of this is that massive reductions in terms of cost, especially when kind of like supply chain finance functions, because you're eliminating a whole bunch of redundant activities. So plan reconciliation, standard, all these things, basically all automated. And that's kind of like one of the things I find with, when I talk to kind of finance people, that they see that FP&A tools really aren't made for their specific needs. So what ends up happening is that you get some massive reductions in terms of budgeting cycle time, S&OP cycle time, but as well as the cost of executing the process. Now, just to kind of bring this back down to earth, a couple of years, or last year actually, I did a session with PACE, where I actually demonstrated a solution that did exactly what I just showed you, and it's a working solution. Now, so you can go look at that. But the one thing I did want to mention that solution was actually based on a process that we put into an FP&A tool. And one of the things my perceptions about FP&A tools have changed somewhat, because this was a pretty simple solution, and this particular FP&A tool just got crushed underneath the volume. So one of the things I find with FP&A tools, I just find that they're just as complexity increases, they're just they get crushed underneath the complexity. So one of the key takeaways from this is that you're going to get, this is a superior process that costs a lot less, drives a lot more value, especially through cost and profitability improvement. And there's a case study in the rolling forecast webinar that I think you may find relevant, because I've actually done this in a number of clients without using any tools. I think you find that would be quite interesting. So that's the process. So with a process in mind, what I'd like to do now is just talk about, before I get into the supply chain planning tool, just kind of like the infrastructure and what's required to make it work. So the first thing I want to talk about, one of the things, the reason I have this up here, I used to work for a prescriptive analytics software company called Genova. It's now out of business. So I'm not promoting a particular product, but you'll see on the left-hand side that, these are actual case studies of clients that we worked with. And we say some clients like vast sums of money. And basically what, I think you'll see Gartner classified it as a supply chain planning tool, but it was far much more than this, because it was actually, one of the things you end up finding is that there's absolutely no difference between mature supply chain planning and mature activity-based planning, or time-based or profitability planning. It's the same thing. And one of the things that we were doing was actually simulating and, solving some pretty complex problems. And one of the things, like the model on the left-hand side, I'll get into a little detail on the next slide, but inevitably, one of the things that we would end up finding was that, when we talked to CFOs, they'd end up saying, I had no idea that there were models out there that could do this kind of stuff. And the point I'm making here is that these models, when you compare like an FP&A tool to these models, there's absolutely zero comparison. It's kind of the 64 Volkswagen kind of comparison. So, all these terms over here, they're all basically the same thing. So the process I mentioned to you does all of these things. It's all the same process. And what underlies all this is really just having embedded planning logic. So the whole idea of having, recreating all this planning logic every time you create a model, to me, I think is just absolutely ludicrous. And one of the fundamental flaws in kind of FP&A and XP&A solutions. And really, to really understand a business, and with many of you have probably known by now, if you'd understand the flow of inventory or flows of, and the movement of inventory, you can't possibly understand cash. And if you don't understand cash, you don't really understand the economics of your business. And what underlies this is that what really good planning tools are doing, and what we did with Genova, is that you're planning horizontally across legal entities. And one of the biggest problems with FP&A tools, especially if you're a global organization, is that whatever models you're doing to kind of do cross-entity modeling are probably wrong. And what you need to drive the sort of complex planning that you need is to plan and manage at the intersection of activities and processes. And this is kind of the infrastructure that I was talking about. Now, if you're like a small manufacturer, this is probably a little overkill. But when you get into the big companies, let me tell you what the problems are. And these are all very practical problems that you've probably experienced. So I'm going to pick the first one, the time to create a scenario. Like in some companies, one of the things that a lot of solutions do, if you want to create a scenario, they're going to make a copy of your data. When you get into big companies, when you hit that create scenario button, you could be sitting there for hours. And that's a really real thing. Whereas tools that are made for do scenario planning will do it in a minute because they're specifically designed for it. And when you want to run a scenario, tools that are specifically designed for it are going to take a minute or two versus some that can take a half hour or an hour. And the reality is that, what's happening out there is that you've got, like companies who do this for a living, they've invested vast amounts of time to speed up their scenario planning. And what's happening is that solution providers, both on the FP&A side and on the supply chain side, are throwing these models out there to, to consultants who don't put nearly the same amount of time, so you don't get nearly the same amount of performance. Now, as well, one of the challenges that companies have, especially with big ones, is that you don't really have one scenario planning tool. You've got finance and ops. So the reality is that the time required to develop an executable plan is often 2 to 3 weeks. So you create something in S&OP, throw it over, and then you're doing a whole bunch of things in finance to create a base plan. So as well, and if you're not using the entire plan, you're probably missing risks. So these are actually really very real things. And when I hear companies or software companies talking about scenario planning, 9 times out of 10, they're talking about very simplistic tools that just aren't made to do this kind of stuff. And this is kind of like what they're missing. So unless you've got something that's specifically designed for this, you're not getting what you need. So one of the things that Gartner talked about was that, a lot of companies weren't getting a lot of value out of advanced analytics. And to me, the reason for this is that you're building it on completely the wrong foundation. So in a lot of cases, you're attaching a jet engine to a stone wheel, or in the case of the analogy used before, like a 64 Volkswagen. You just have the wrong solution set there. So one of the things I thought I'd do here is just find out, to what extent are you finding these problems, with the tools that you're using? Are you getting the same, having the same issues with scenario planning? So these things that you see on the bottom, are these applying to you? So let me turn the poll on. And Deborah, just out of curiosity, what are you finding with scenario planning? Are you finding it's living up to expectations, or are you guys still struggling with it?
In the companies I've been at, it has been a bit of it's not that simple to do. And back to what you were explaining about making a copy of the model and then playing with it, that's exactly what I've done in the past. Luckily, we had a team of programmers who were there, and we were able to do that and to calculate the different, whatever scenario you're looking to do. But yes, that's exactly how we were doing it. And I think that is not the most efficient way to do it.
Yeah, it's really challenging. So when companies start, kind of getting into, more advanced uses of kind of financial planning tools, I think, and S&OP tools for that matter, I think what you end up finding is that, the whole vision of kind of scenario planning and analytics and all that, there's a big gap between theory and reality of analytics and scenario planning.
Okay. Dean, we have 76% of attendees have given their answer. Can our group please try to submit your question before we give the answer so you can get the credits?
Okay, we think we plateaued here. I'm going to just move it ahead. Okay, from a manufacturing, from a manufacturing perspective, I think most are experiencing these things. Sort of a similar sort of relationship in non-manufacturing. So I think that, the audience is definitely, seeing some of the same things that we are. Okay, so with that, what I'm going to do now is I'm going to move on to kind of the supply chain planning piece and talk about some of the enablers of these tools. So first off, what I wanted to do is just make sure you understand where we're at. So we talked about the process at the top. I talked about the framework in the middle, and that framework is really the thing that kind of gets layered over the planning models in the supply chain from a supply chain planning perspective. So let me just talk about the modeling logic. So in any kind of supply chain or manufacturing tool, you get bills of materials and routings and those sorts of things, and you can also have bills of activities, which and you can apply this to make, buy, internal and external activities. But the main thing I want to talk about here is that these structures allow you to actually learn or use models with very little training. And I think that, for those of you that have been through kind of FP&A tools, and by the way, I've worked with just about every FP&A tool here, and whenever I've taken these training courses, it almost makes my head hurt. You know, so the idea of spending 6 weeks to learn how to use a modeling tool, I think, is just absolutely insane. Given where we are right now. One of the things about these tools with embedded logic is that if you understand the basic structures, you can learn how to use these tools in a very short period of time. And like what I'm saying, within a day or something like that, you'll know enough about how to actually build a model, because it's all kind of based on things that are known to a lot of people, and the math is all very similar. So especially, and the thing I really want to focus on here, especially on when you start expanding models outside of manufacturing, these bills of activity structure become really important. So the things are in red are things that I've actually used to, in some clients, to extend these sorts of models out to, but you can also extend it into transportation, warehousing. And one of the examples I have later on is in warehousing, as a matter of fact. But what the main point here is that these things provide the means for operationally realistic tools that can be shared with operations. So the basic logic is that you're doing kind of the same thing over and over again. You're converting one volume to another, you're quantifying resources, applying some sort of volume modifier, and converting it into currency. And it's basically what you're doing is basically simplifying driver-based planning. And the reason why that's so important is that if you really want to drive kind of like prescriptive analytics, and have like model constraints, those things, in order to do that, you've got to attach it to an activity or to a planning object. And that's kind of like one of the major downfalls of FP&A tools, where you have all these massive numbers of formulas that you've got in there. What we're essentially doing is basically modeling an entire company with a limited number of formulas that do exactly the same thing over and over again. And in more advanced situations, you're working with supply chain planning guys or people to maintain inventory parameters, but you can also include probability distributions. This is also what kind of drives real options. So the main point here is that the models sitting in these supply chain tools are really what you need to drive advanced analytics. And one thing I want to reiterate here is that this is really kind of like the next generation of integrated planning or activity-based planning. It's all the same thing. And what you're doing of these flows, you're essentially, if you look at the number of potential flows in this example, it's, if you just do the math, the number, the nodes here is 6, the number of nodes here is 5, which gives you 30, and you just do the math, you end up with a whole bunch of flows. And basically what you're doing is simulating individual flows and individual companies, if you will. And one of the things that this results of this is now you have more dynamic models. So if you change a mix up here to and this down here, so once you change the upstream, it automatically changes the downstream. And if any of you have worked with FP&A tools and run scenarios, a lot of times you have to go back into these tools and manually update the parameters. And if you're trying to do like a bunch of different scenarios, it'll kill you trying to do this. You just never get what you really need. And it's this sort of an analytics that you need to kind of do sort of heavy duty cash flow forecasting and customer profitability. And what underlies this are the specific nodes within within these models. So what you're having is an individual accounts and activities, if you will, for each of these nodes. And in the case of a warehouse, one of the things you're doing here is you're helping the warehouse manager, if you will, articulate, how many resources does he need. So to do that, these planning models need to be at a level of detail that they feel comfortable with to actually do this. So you're having different types of models in here. So in the case, what I'm going to show you here is just quickly an overview of what a planning model might look like for a warehouse department manager. So over here you have the accounts, the activities, and the specific types of picks that you might have. this is kind of like the master data. The main thing to note here is all these minutes per pick are different. So these would be the models that the warehouse manager would use. Then you have an hourly rate that the HR group might maintain. Then you have one assumption here is like picks per order. So one of the things you're doing is you're translating demand, volume, and revenue into number of orders, then picks per order, which are all unit of measure conversion calculations. Then based on that, these numbers on the left are then driving these numbers on the right. And this would essentially be taken from, if you have a demand plan, if you've got, a demand plan with 10 million line items in it, it's calculating resource consumption at that level and summarizing it here. So you take these volumes, multiply it by the volumes to get resource consumption, which and then in turn gives you a financial forecast. And you remember me talking to you about productivity rates? It's calculating productivity rates. And a warehouse manager can look at this and say, yeah, those numbers look right to me. I look at the, like if you had a pick volume of X, 1 month and a pick volume of 10X the next month, you'd say, well, gee, that doesn't look quite right. But the whole idea here is the model that's driving this is in fact that the models that a manager would use to run their business. And basically what I'm describing to you is the same process that S&OP is based on. It's a resource-based process that involves frontline managers where people know the numbers coming out of this are exactly right. So nobody's going to be challenging the assumptions. And this is really what provides a foundation for more sophisticated process that can kind of cut cycle time. And this same sort of idea is in the rolling forecast webinar. I did this just manually with one company. And this is really what provides a foundation for, sophisticated scenario planning. So with that, let me just talk about a couple things about capitalizing on innovations and value in terms of how one can go about capitalizing on this. So one of the things I'm really talking about, I wanted to have kind of an analogy here. You hear a lot of companies talk about integrated planning, and one of the problems is that it's really not well defined. Integrated to one person is different than that. And, if you look at kind of the technology analysts, they're really not doing much to help, define what that is. But one of the things, an analogy I'd use is that, the disruption I think I'm talking about here is that, we've now got a whole bunch of tools, when we use smartphones that are now kind of replacing these older tools. I see this exact same thing happening now with these, I just called them, for the lack of a better word, enterprise planning and performance management. I don't know what the right term is, but this is really what it is. So, like if I'm a CFO, I want to have a tool where, I have like a rolling forecast process. I may want to do tax optimization. I want to do treasury optimization. I want to use a prescriptive analytics tool to do this. The thing is, there's not a well, I won't say single, but if you look at kind of FP&A tools, the vast majority are not even remotely close to delivering something like this. This is why I see kind of like the innovations coming in with these supply chain planning tools being incredibly disruptive. One of the primary reasons for which, what used to take months and years to develop, and deliver little value is going exactly the opposite direction, like vastly shorter periods of time to implement, vastly reduced costs, which, and it really exposes kind of like a value gap I see. So they're really highly disruptive. But the thing is, the entire market is still focused on the top right. I think that a lot of companies, if you look at, I believe this from a consulting perspective, like especially FP&A tools, this is kind of almost like an FP&A tool type value destroyer, because when you look at the value coming out of these tools and the fact you're basically getting multiple tools for the price of one, you can see that this is a very disruptive type of technology. So, and when you start thinking about solutions that you need, one of the things, like I had a conversation with an FP&A tool provider a little while ago, and they were talking about great, wonderful things. They had this integrated planning solution. But anyway, so I asked them what a few questions you see on the screen, like what's your solution worth? Where's the value? And how fast can that be self-funded? They couldn't answer that question because, I think a lot of the FP&A tool providers are talking about planning being the end state as opposed to how much money is a good put on my bottom line? Because if they had started with that question, they would have recognized that most of these FP&A tools are not optimizing profitability and costs in the same way that we think about it in large companies. And that, you really need kind of like the level of granularity and sophistication that I think these innovative tools are talking about. And from an implementation perspective, I also see something very interesting. Like when you talk about implementing FP&A tools, you might be a year, it might take you a year to get something done. And at the end of the year, you ask, well, how much value did it create? And you usually talk, well, it saved me some time here and it saved me some time there, as opposed to putting cash on the bottom line. Because if you've got profitability issues, one of the things about having a self-contained tool and an embedded tool is that you should be able to go in and utilize a tool to drive value in a very short period of time in a pilot project. And one point here, I just want to make sure you realize, I don't think companies need to go in and kind of clean house and replace all their tools. So I think there's that they should be thinking about how can you augment what you've got with some of these with these tools. So one of the key takeaways here is that, and what I talk about in the article is that, I think much of this involves kind of getting educated, and that having the right leader is really important. So those of you who have kind of deep operational experience, supply chain experience, are probably well equipped to help drive this and really assess the value of these things. So the next section, I just want to talk briefly about, as a special interest group. So, one of the things I think you may be seeing here is that you're probably getting a perspective that you may not see elsewhere. And I think that's one of the things that as a special interest group, that what we're trying to do is promote ideas, innovations that you're probably not going to find elsewhere, especially when it comes to integrated planning. Because, I mean, if you've sat through, FP&A vendors demonstrations, and I think I've probably sat through 100 of them, most of them say some very similar things. And especially when it comes to integrated planning, I think the whole notion of integrated planning, especially in FP&A, XP&A tools, is really not well defined. I think there's a lot of over exaggeration there. And one of the things that I find, like, as a special interest group, I'm throwing this out there as a kind of a starting point. I think if you look at the way solution providers are looking at these tools, if you look at kind of what they're showing as kind of leading providers, and most of them you look in the top right-hand quadrant are supposed to be kind of the leaders, I don't think these things most of them are even remotely close to being kind of leading practice. I think they're very common practice, but I think what you're finding are tools in those reports are kind of like, I would say, because they're bigger tools, I think a lot of those quadrants are kind of 5 to 10 years out of date. I don't think they're really talking about leading practice. And I think that kind of information is not finding its way into organizations. So if you look at kind of like the capability gaps, and this graphic is also in the article. If you look at all the white space here, there's a lot of things that are kind of falling between the cracks between FP&A and S&OP tools, which I think are being addressed by some of these newer ones. So those are some things that I think that it'd be useful for organizations to understand. So now, what I just described is probably very different than what you're hearing in other webinars. And that, and one of the challenges, as I mentioned, is that there's really no universal definition of integrated process. And I think there's in a lot of cases, there's a perception that these legacy solutions are representing leading practices, but I don't think companies are finding these sorts of insights about kind of leading tools. And especially like if you're in a company that's got, I'll call it maybe CIOs that are kind of focused on, big, well-established companies, and they wouldn't entertain using kind of newer tools. These are kind of some of the barriers to utilizing some of these tools. And the reality is that there's really a real lack of information, I think, about the real current status of companies and their planning and performance management processes, especially in complex manufacturers. So one of the things with these issues and barriers in mind, one of the question I kind of want to leave off with is, to what extent do these issues and potential barriers apply to your organization? So part of what I'm asking here is, as a special interest group, one of the things that we're trying to understand and help you guys do is to figure out, how do I actually, overcome some of these barriers, and, have get some information that's kind of relevant. So, are these the types of things that a SIG could help you out with and provide information to kind of move to the next level? So with that, I'm going to open up the polling question. And Deborah, maybe you can kind of comment on, kind of what's your experience in terms of kind of this sort of information and these sorts of insights finding their way into the organizations that you've worked with. And Hessel, you feel free to jump in at any point in time as well.
So Dean, to your question, I think this applies to I think most of every company I've worked at, and it's the vendors and what they promise. What you were saying before, it's very hard sometimes to get the truth out of it. And what I think the SIG can offer in this perspective is a place where members can bounce ideas off of each other and ask questions among people who are really specialists in this area, and try to get to a better answer as what they've been getting. So I think this is very relevant.
I'm going to leave this open for a couple more, or a few more seconds, and see how far we get.
Right now we have 55% of attendees who have answered. Yeah, now that's not much. Maybe we should leave it open a little bit longer.
Yeah, and while we wait, we were getting a couple of Q&A questions, and so we'll not have time for the Q&A during this session, but we'll have afterwards a separate session on Zoom. I think, Dean, you'll get to that. And in an open setting, we can discuss any questions you have. So do stay tuned if you have some questions we really can discuss one-on-one, face-to-face in the Zoom session.
Right, and it'll be an open mic too as well if you've got any questions. So, so like I say, questions or ideas. All right.
Just worth repeating, Dean, that you put the link to the Q&A session in the attendee chat. It's the very first post there. So after this meeting is closed, participants can simply click on that, and then they can move to the Zoom for the Q&A.
Okay. Okay, so I see that these sorts of issues apply to most people. So I think that's really relevant. So, I'm hopefully we hit a nerve and provided some information that was relevant to you guys. And as sort of a closing, one of the things that we talked about were some of the complexity related challenges that you can read on the right. But some of the key takeaways is that, some of the solutions that, that are currently out there have, a number of flaws, primarily because they're not integrated or manufacturing specific, and that there's innovative solutions that are kind of addressing these problems, and I think are a key driver of value and financial information, offer a lot of benefits And as well, one of the most interesting things about it, I think that there's a lot of opportunity to self-fund some of these things. So I'm going to leave this here. This is my contact information. So if you would like a copy of the article that I wrote or links to any other, I mean, I have other things that I've put together that could be helpful, but, feel free to, write me an email, send me a text, or reach out to me on LinkedIn. Happy to answer any questions. So what we're going to do now is move over to the Zoom meeting, and we'll answer any questions that you guys might have, or engage in any sort of discussion that you want to have.
All right. Thank you very much, Dean. This was very insightful. And thank you to all the participants who carved out this time in their busy schedule. And I hope you have found value in the session. And we would appreciate your feedback, as mentioned at the beginning. So thank you again. And with that, I'm going to close the webinar. Thank you.